So we're going to be talking about getting you started on the spine relief project. If you haven't already read the client engagement letter in your packet that you got from study.net, pause and go read this so that you can follow along. So we have a client here that's getting ready to sign 3 leases and sublease one of the leases to their business partner. And they've come to you with a potential problem in that they have to keep the expenses of the lease below $140,000. They know what the cash flow is, but they don't know what the expense is. And they have some understanding that expense and cash flow are not the same, but they understand the cash piece. And their banker wants the accounting standards to support the expense treatment for the leases. So you've got to also provide the technical literature. So there's 2 parts to the project. There's the technical calculations, which we're going to do a great deal of them here together. And then there's the client advice memo, which you are going to prepare from the calculations that we're creating today. So let's have a look at the data. So you have an Excel spreadsheet with this, and you also have a grading rubric over here. So we have an X-ray machine, an IT, and an office building, and then we also have sublet. So this is lease income, which offsets the lease expense from the 3 leases. Okay, so the first thing that we need to do is find out whether these leases are capital or operating using the 4 rules. Now this data might be slightly different than the data in your project since I changed the data a little bit every semester, but the process would be the same. All right, so the 4 rules are the transfer of title. Let's see here, convey title, none of them. Okay, so none of them are going to be a capital lease because of that criteria. Bargain purchase, this one has a bargain purchase, but none of the other ones do. So we already know that the X-ray machine is capital Y because they've got a bargain purchase. All right, and then the useful life. All right, so we can do this. So the lease term divided by the useful life, we can convert that to a percent, so 86%. So we know this one's a capital lease because it qualifies here. And then this one we could check to see the present value of the lease payments. Now we can calculate this for the other 2 leases because we're going to need it to do the amortization of the loan and to figure out the depreciation expense for the assets. So we might as well go ahead and do that. All right, so let's use our function key, present value. So let's go find the rate, and we're going to divide that by 12 to get a monthly rate. The number of periods, so there's going to be 6 years, and that's going to be times 12 to get the total number of monthly payments. Then the payment is going to be minus the monthly rent, and the final value will be minus that bargain purchase. So that's just going to happen once in the future. And then for type, if you leave it empty or 0, that's ordinary annuity. If you put a 1 there, that's annuity due. Here the payments are at the end of the month, so we can leave it blank. All right, so that's the present value of the lease payments. Now we can actually, we can drag that across. Okay, apparently we can't drag it across. Oh, because there's no bargain purchase. But here I can shift it down to put the required salvage, which would work the same in terms of the present value, because both a bargain purchase and a required salvage are a final payment at the end of the lease. So in terms of calculating the present value, they're the same. The payments at the end over the life of the lease being negative, and the current is a function of Excel requiring cash inflows and cash outflows to have different signs. So if we made them all positive, it would say this does not result, we can't calculate a present value. All right, now this one, there's no final payment, which is why it's complaining here. So we're going to see it's saying there's no value there. So we'll take that final payment out. This one is an annuity, ordinary annuity, so we're good. Let's go back and fix this one to be an annuity due by putting that 1 in there. Okay, I think we're in pretty good shape there. All right, now back to, is this a capital lease? So this would be a capital lease if $77,000 and some change was at least 90% of the fair value, and you can sort of visually tell that it's not. It's 77 and some change percent of the fair value. So this one's going to be an operating. It did not get reclassified under any of the criteria. So now let's come up with the lease expense net for the status quo. So for the capital lease, for the operating lease, it's going to be easy because it's just going to be the monthly rent times 12. So that part's not going to be very difficult. But for the other two, there's going to be interest expense and depreciation expense. And then there is some executory costs, which would be the same under capital or operating for the office building. But that would still be an expense of the various leases. So here we go. We can, have a heading here. Come on now, let's all play nice. All right, we've got our So we already know the rent expense for that one, and the sublet is an operating lease. It's cancelable. Can you see that? So we know that's going to be an operating lease. So that's going to be income that's going to offset the monthly payment amount. All right, so now we need to calculate the interest depreciation on the X-ray, the interest depreciation on the office building, the executory costs we already know are the monthly cost. All right, so this is sort of our framework where we can sort of see what is exactly the amount of problem, if any, that our client has, because their total has to be below what's in the letter. And this, for this semester, it was $140,000. For your semester, it might be something a bit different. Okay, so how can we get this interest and depreciation expense? Well, the depreciation expense is going to be the present value of the lease payments divided by the lease term if you toggled in on useful life or present value, which we did here. Oh, excuse me. No, we get to use the whole life here because we toggled in on bargain purchase. Okay. And then over here for the office building, we would take the present value. Now this one we didn't toggle in on bargain purchase, so we can only use the lease term because we toggled in on useful life. All right, so we've got the depreciation expense. Now the interest we can't do by a simple calculation. We have to do an amortization table for the lease. So let's do that. All right, the liability balance at signing for X-ray is present value of the lease payments. All right. And the payment is monthly rent. Did you see how I was linking this to the other tab? That is making a live model, and you are required to do that. So all of the amounts over here should either be a calculation, a formula that is linked to the original data, or it's linked to the numbers on this page, so that when I grade it, if I change the 4,600 to 4,500, all of your tables will update. So that's called a live model, and you're required to do that. So this would be month 1. And how many months is this going to go? Lease term is 6. So 6 years. 72. Alright, so let's go on down to 72. Oh, got a little too far there. There we go. Okay. And I'm going to put my F4 key to put the $ in front of the B and the 13. If you're using a Mac, you'll have to type in those $ yourself. The F4 key won't do it. All right, now the interest expense is going to be the liability balance at the beginning of the period times that interest rate we had over here, divided by 12 to get 1 month's worth. All right, let's make this all dollar stuff. So now the change in principal is the payment minus the interest. This should look familiar from when you were doing bonds. And of course, we've done this a little bit in class as well. So the liability less the change in principal portion will give you the new liability. And so when you copy this down, let's freeze this address here, or else you'll get an error when you copy it down. All right, I can just go double fast on that and it will copy down. Let's make sure it goes down to 0. Okay, so it doesn't go completely to 0. What kind of lease was this? Ordinary. Okay. So on this would be the last payment, so I've got to add into this last payment that bargain purchase. There we go. Now it comes down to 0. So all is well there. Now, why did we do this table? So we could figure out the interest expense. So now I'm going to do, let's add up all the interest expense I need. So that would be the first 12 months. All right, now we need to calculate the interest expense for the building. So let's add an amortization schedule for that. All right, and I can borrow the formatting from that page. All right, and then the liability balance for the building will be the PV we calculated. And then the interest expense would be the prior month balance times the interest rate divided by 12. All right, and I want to freeze that relative reference. And then the payment amount. Let me freeze that address. And the term was 12 years. Okay, so we're going to be going down a lot of cells here. All right. There's our 120. Let's double click real fast. And let's see if it went down to 0. It did not. Let's figure out why. We need to go down to 144. It's not 10 years. It's 12 years. Okay, so we're going down to 0. So all is well there. So now we can go back here and add up 12 months for the building amortization. And there we go. So now let's add this all up and see whether or not we have an issue with getting below our 140. Okay, so we're at 154,802. So we have to shed 14,802 at least in order to get down. And so this is when you can start brainstorming about changing this data. What you may want to do is save this data tab or create another tab. Idea 1, and then you can create a building amortization, an X-ray amortization, or even an IT and phone amortization if you're going to make a change that's going to make that capital, and then see how this changes. And of course you would change this to idea 1, and you would make the changes and see whether or not this goes down. Now there are some rules in this project. Your client, you can't change this cash flow by anything but tiny amounts that will be maybe a few hundred over the entire life of the lease, not a few hundred a month. Why is that? And that's because of the economics of it. The cash flow from one party to another is the economics of the deal. And so if you change that greatly, you change the deal and the other party is going to walk and go find somebody else. So you want to preserve the deal if you can. And the other is you can't change the interest rate. The interest rate is based on the market, and you're not powerful enough to change the marketplace interest rate. So you have to honor that. But you can change other things, and so you can play around with it a little bit. So for instance, if you move the $6,000 to bargain purchase, things might change. If you change the lease term, things might change. Can't do anything about the executory costs. You could call that rent. You could add that to the $6,000 and have it be $6,800 and see if that changes. So you can just play around with it. Some things probably won't help. Some things probably will help. But you can come up with an idea and think in terms of not just the math of it, but also the feasibility. If you ask the other party to sell you real estate in year 10 of a 15-year life at $1, they might not be willing to do that. So that you would definitely have to admit that to your client, that you'd be asking a lot of the other party, and that may not be your first idea or your strongest idea that you're advocating. All right, so you're going to create a footnote that maybe looks something like this, where you're going to show the minimum lease payments that would include any salvage or bargain purchase final payments in the various years. For the capital leases, you're going to back out the interest portion, and then this net lease obligation is going to balance back to the obligation in the financial statements that you're going to reveal here. And so you're going to have an X-ray, leased X-ray, and accumulated depreciation if you end up keeping that as capital, which you may or may not, but at least in the status quo, it's here. But in your idea 1, you may have the IT being leased and the building no longer being leased. I'm not sure exactly what you're going to end up doing, and you don't know yet what you're going to end up doing. And then for the bank, you're going to need to either create another tab and put the codification on it, or cut and paste it here below so that the bank has what they need to show that your treatment has been in accordance with GAAP. Then you're going to write a memo to your client. And there's some guidelines about writing in your packet, including the first sentence must be the main idea. You have got to say in the first sentence, did they have a problem and was it fixable? These client advice memos are not suspense stories. You don't say in the first sentence, it was so nice to work with you. I have worked terribly hard. You want to say in the first sentence what you found and the importance of it. So once and you can go look for ideas on client advice memos in the packet. But once you have that written out in Word, you want to import that. And so I want to show you how to insert it. You're going to insert an object here, way out here. So off your screen, unfortunately, but it's under the text. And if you go out way out to the right, it's insert object. And I'm going to do it from a file. And so my memo's not very long because I just had a placeholder, but yours will be a full page, probably. And so, you'll have your full client advice memo that's nicely formatted in Word. Please do not use Excel as a typewriter. Do not use Excel as a memo. Don't try to write in these little tiny boxes. Don't try to use a text box. Do a professional job. Do it in Word, and then import it here on a separate tab that you have client advice memo as a label or something like that. All right, have fun.